If I told you that some billionaires actually hope for the market to crash, you'd probably think that sounds insane. Who in their right mind wants to watch millions of people lose money? But here's the harsh truth. Every time the market falls, every time headlines turn red, every time people panic and sell everything they own, a tiny group of the richest people on the planet quietly get even richer. They don't just survive crashes, they treat them like a discount sale. And today, you're going to see exactly how they do it. Let's break this down step by step so you can understand the moves they make, the mindset they use, and why market crashes are actually some of the biggest opportunities in the world for those who are prepared. Most people fear market crashes. Their first reaction is panic. Their second reaction is running to sell everything before it drops even more. They worry about losing their savings. They worry about their future. They worry about every number they see drop on their screen. But billionaires, they see the same crash and react in the complete opposite way. While everyone else is watching the news and freaking out, they're studying charts, hunting for deals, and planning how to use the chaos to their advantage. They know something most people don't. Crashes don't destroy wealth, they transfer it. When prices fall, money doesn't disappear. It simply moves from the pockets of people who panic into the pockets of people who stay calm and make smart moves. So today, we're breaking down how billionaires play this game and why they win almost every time. The main problem is simple. Most people react emotionally to the market instead of logically, and emotional decisions are exactly what help the rich get even richer. Here's the challenge the average person faces. When the market crashes, they see loss. Billionaires see opportunity. When the market falls 10%, most people think, this is bad. When it falls 30%, they think, this is a disaster. When it falls 50%, they think, everything is over. But billionaires think the opposite. To them, a crash is like finding their favorite items in a store suddenly marked down by 30 to 50% or more. They've been waiting for these moments. They have the cash ready. They have a plan. They understand cycles. They know the market always recovers eventually. And the biggest challenge for the average person is this. They don't have the billionaire mindset or the billionaire strategy. So when a crash happens, they freeze, and the wealthy take advantage. So how do billionaires actually make money during crashes? This is where things get interesting. There are a few specific strategies billionaires use during crashes. None of them rely on luck. None of them rely on guessing. And all of them are based on knowing how money really moves during extreme moments. Let's break down the most important ones. 1. They keep huge amounts of cash ready. Most people invest all their money during good times. They feel confident when the market is going up, so they put everything in. Billionaires do the opposite. They always keep a pile of cash on the side. Not because they're scared, but because they know that crashes will come eventually. And when they come, they'll be ready to buy everything at a huge discount. Think of it like this. If you had $1,000 and knew your favorite thing would go on sale by 50% once every few years, would you want to be broke on the day of the sale? Of course not. That's how billionaires treat the market. This is why, during crashes, they are not panicking. They're shopping. 2. They buy blue-chip assets at massive discounts. During a crash, prices drop across the board. Good companies fall. Bad companies fall. Everything gets dragged down. But billionaires don't rush to buy everything. They target assets that are strong, stable, and likely to recover. These are things like major tech companies, industry leaders, large banks, real estate in good locations, energy giants, big brands that survive every crisis. They don't need the stock to bounce back tomorrow. They're thinking years ahead. They know that if a company is strong enough to survive the crash, its price will eventually come back and even hit new highs. And when that recovery happens, the billionaire who bought during the crash doubles or triples their money while everyone else is wondering how they got so rich so fast. 3. They buy when everyone is selling. This is the move that feels the most unnatural. When the market crashes, the average person feels a deep urge to sell. Billionaires feel a deep urge to buy. They know that the bottom of the market is the point where fear is at its highest. The moment when people say things like, "This time it's different," The market will never recover. I need to get out before I lose everything. These emotional decisions push prices even lower. And this is when billionaires step in. They aren't guessing. They aren't chasing a trend. They're taking advantage of the wave of panic selling that drives prices far below their real value. They basically buy the fear of everyone else. 4. They invest in companies that are struggling, but not dead. This is one of the biggest ways billionaires get richer. They look for companies that are in trouble during the crash, companies that need cash but still have real value. Then they invest in them at extremely low prices. Sometimes they buy a chunk of the company. Sometimes they offer loans in exchange for shares. Sometimes they buy the whole thing outright. A company that was worth billions might suddenly be worth a few hundred million during a crash simply because the market is panicking. Billionaires look for these chances because when the market recovers, those companies often explode in value again. And who benefits the most? The billionaire who picked them up at the lowest moment. 5. They use crashes to buy entire businesses. This is something average investors can't do, but it is one of the biggest wealth-building moves of all. During a crash, small and mid-sized businesses struggle. They need money fast. They can't pay bills. They can't get loans because banks tighten up. This is when billionaires step in. They buy businesses at bargain prices. They buy land at bargain prices. They buy commercial buildings at bargain prices. Think of it like buying a house during a flood. Everyone else is running away from the problem, but a billionaire is already looking at how much that house will be worth after things dry up. They don't look at conditions today. They look at conditions 5 years from now. 6. They stay calm. When everyone else loses their mind. This might be their biggest advantage. Billionaires don't panic. They don't react to news headlines. They don't sell because everyone else is selling. They understand that fear is temporary, but opportunity is permanent during a crash. And here's the truth. The reason billionaires can make calm, smart decisions is because they study history. They know crashes are normal. They know the market has recovered from every crash in history. They know what looks scary today will look small years from now. They don't see a crash as the end. They see it as a reset, and they act on that belief. Key moment. All of this comes together during one specific moment in every crash. The moment when the panic reaches its peak. This is the moment when everyone you know is saying things like, "I can't take the losses anymore. I'm selling everything. This is getting worse every day. The market is dead." This moment is the turning point. This is when billionaires quietly make their biggest moves. This is when they buy the most assets. This is when they get their best prices. This is when they build future wealth while everyone else is pulling out. And if you look back at every major crash, 2000, 2008, 2020, and even earlier, you'll see the same pattern. The biggest fortunes were made during the chaos, not after. The crash is the moment the wealth transfer begins. The recovery is the moment it becomes visible. So here's the final truth. Billionaires don't get rich from market crashes by luck. They get rich because they understand something most people don't. Crashes are temporary, but opportunities created by panic are huge. They stay calm, they stay prepared, they keep cash ready, they buy strong assets at weak prices, they ignore fear and focus on value. They use the moment when everyone else is scared to set themselves up for the next boom. While others run from the fire, they're already planning how to rebuild on the empty land. And that's why every time the market crashes, the gap between the rich and everyone else gets wider. It's not magic, it's strategy. Subscribe if you want more videos like this.